The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 4th, terrific Thursday edition of today's Money Masters show. I'm your host, Steve Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that we do all that we can to have one heck of a terrific Thursday. I know I'll do all that I can during the next hour to share with you extraordinary tools that help us identify where price is headed to. That includes our lightning bolt pattern, our A to B equals CD tool. It includes Fibonacci expansion and retracement. We'll take a look at candlestick charting. We'll take a look at market profiles, Chapman wave. We'll take a look at the Rhodes momentum trading signals. We'll use them all to help us identify where price is headed to. And you know, I know that each of us, you and I, we start off equal every morning when we wake. Each of us have those same 86,400 seconds that are in our bank out there. And I do appreciate you spending 3,600 of those seconds with me. I'll make sure that it is a worthwhile investment. Now, it's a interactive show. That means I'd love to hear from you. Tell me what you're taking a look at. Together, let's go hunting for bulls and bears, help you identify maybe how to manage the trade that you're in, or maybe something that you're taking a look at. And you can easily do that by just reaching out and giving me a call at 877-927-6648. Internationally, you can give us a call as well at 727-445-1044. Would love to hear from you. And it is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and let's go kick this show off out here. We've got the Dow trading up 67 points. She's trading out at 17,144. S&P up 8 points, trading at 2,008. NASDAQ Composite up 26 points at 45.98. NDX 100 up 25. New York Stock Exchange up 31 points. Let's take a look at net advancing versus declining issues out here. You're up net advancing 715, about 1 3/4 to 1. As far as advancers outpacing decliners, what's the number out here? What is the number that we want to be keying in on today? I'll look it up during the next segment or what have you. I think it's around, I don't even want to give you a number out there. You got the VIX index. Let me check in on the VIX. Oh, down 47 cents. That's bullish out here. That is for sure. In fact, if we take a look at the VIX index, here is the VIX index trading out at 1189. Of course, the key here, that was for, what was that, September the 3rd out there. The key level to be watching inside of the VIX, let me find my cursor, son of a gun. It is gone. It's gone AWOL on me. So now I just need to pull it back. There we go. There we go. Come on, hit that button there. There we go. Now I got my cursor out here. So we take a look at the a 50-day exponential moving average. Oh, son of a gun. Where is it? I got to move it so I can actually read it out here. It is 1273. Shoot, it's right in front of me all the time. 1273. That's the key number to be watching. If we see it close above 1273 today, we will have some type of sell signal inside the market. Otherwise, you've got liquidity. That's really how Stevie likes to use the 50-day exponential moving average and the VIX index. A sign of liquidity or lack thereof. Right now, you've got a sign of liquidity. That's one of the things that moves prices higher out here. If we take a look at things that are popping in the market out here, the upside leading the charge, you got PVH Corp. That's up a nice $11, 9% up here. That is, we didn't even take a look at that. Let's go take a look at this equity here. It's trading right into a breakdown area. It made the 1-to-1 A to B equals CD to the downside, so it completed that pattern. Let's take a look at the delete. That's what I want to do. Let's take a look where it's trading into. This equity here broke down on the trading session of, that is, June the 4th, June the 5th out here. It came down with big volume, 5.4 million shares for this equity. At this stage, it is acting as a resistance level, as a supply line. But let's... what the heck did I do there? Let's take a look at volume behind today's move. 1.7 million shares in only 41 minutes of trading. Now, that's pretty good volume. If it can close this window, if it can repair that damage, that's really what it's trying to do. That would be a close above 127.88. That would be pretty positive for this. Otherwise, this could just be setting up a large consolidation pattern. Let me pull this back a little bit further, see what else we have on this chart to take a look at. Well, here's your consolidation. Here's your rather large consolidation inside of this equity. That would take us all the way back to, I'd come back to the trading session of June 11, 2013. June 11, 2013. 107 is the bottom of the consolidation, and it tried to break out of it one time before, tried a little bit of a breakout session out here between the early part of January. So I would say that the consolidation level inside this equity right around the 135. So 106 to 135, you're looking at about a 30-point, 29-point consolidation. Closing above 127.88, you ought to see a price move up into its most recent swing point highs. That gets you up into that 133 to 134 range out there. And this is on ticker symbol PBH out here, having a nice morning on its pop. Running into a bit of supply, but nonetheless having a nice morning. We've also got Amazon. That's trading up $9. It wants to get back to its highs out here. Amazon is targeting the most recent gap down, which is going to be the trading session from July 24th. So expect Amazon to try to get into that 314 to 324 level. That is what Amazon is doing. We've got Mattress Firm out here. Going to the mattresses, up 10%, up by $6. Let's see if they were out with numbers here. Looks like they are. Net income of $14 million versus $14.2. You know, you can almost find as many Mattress Firm or mattress stores as you can Walgreens or CVS's out there. In any event, I don't know where that commentary came from, but it just did. Net sales, $410 million versus $302. So net revenues, but I don't know, with the acquisitions and same-store sales, I don't have that number handy here. But if we do take a look at what Mattress Firm is doing, gapping up this morning, looks pretty strong. Well, let me put this back out here. Let's put this on. Looks like it's at 52-week highs out here. Let me see. This may be all-time highs as well. Most certainly is. So this is Mattress Firm is at all-time highs. Now, interestingly enough, we must have taken a look at this equity when it broke out on the trading week of August the 11th, when it took out the B point with volume, 2.3 million shares versus 897. That had a 1-to-1 A to B equals CD price projection, and I'm sure if we were listening on that show, Stevie said, nah, probably not going to 62.49, more likely 68.07. And this week here, it's hitting that 1-to-1 with a wide-ranging bar, and 68.07 is most certainly its next stop. MFRM is the ticker symbol. We've got that to the upside. You've got Google up $6. You've got Bolt Technologies, that's a buyout. That's up 35%. We've got the Methode Electric. MEI is the ticker symbol. Let's go take on. This looks pretty nice on a weekly chart as well. Now, the swing point area on a weekly is 2.3 million, 2 million. This week it's done 1.3. Let's take a look at the daily action inside of this equity. So it's taking out its swings on a daily basis with volume out here. So this had a breakout, and then it pulled back well below its breakout area. Its breakout area was really the low of 32.36 from June the 25th. It got down to a price point of $30.98. Nonetheless, this is now forming an A to B equals CD. It's confirming an A to B equals CD up pattern. This thing has had a couple of signs of strength. A little bit of wackiness. It also had a sign of weakness out here back on March 13th. Nonetheless, let's take a look where price is headed to. It's a target area here. The A point's going to be down here on the April 28th low. The B point's going to be that little nest. What the heck did I do there? Let's delete that and start over. So we've got our A point down here. I'm going to use the April 28th low. I'm going to use the high from July 3rd. And the C point's going to be the August 1st area. 1-to-1 A to B equals CD. Inside this equity ought to take it up to 42.82. 42.82 to 46.04, is likely its target. It needs to close today about 38.57. It should have no problem doing that. That is on ticker symbol MEI out here. Let's take a look at some things here, moving to the downside. Then we'll go back. We'll go take a look at specifically, we'll take a look at the indices. I gave you the price projection inside of the S&P, or I did that in the last show. I think 2015 is the number that we should find the S&P run into some significant resistance. We'll do the same thing for the other indexes as well. We want to take a look at gold, so don't forget to let me do that. We most specifically want to take a look at silver, high-ho silver, because silver is running up into a resistance area of a down channel line out here, and if it can break above that, then we might be seeing a significant bottom forming here as we take a look at that shiny metal out here. And that's real positive, with the U.S. dollar index being up 542 ticks, 54 cents, trade out at 83.43. It looks like the U.S. dollar index has further to run to the upside out here, but it has not had an impact on the commodities out there, and that should always make you say, something to think about. Nonetheless, let's take a look at some things here that are moving to the downside. Matrix Services, this is an ugly-looking stock chart. This is down with big volume. Its A to B equals CD pattern to the downside, says it wants to go target 1650 to 1301. That is the price range that it is headed to. Regeneron Pharmaceuticals off about 1%, down $3 this morning. Really no problem here in Regeneron Pharmaceuticals unless we see a island reversal that would take place here perhaps tomorrow. This thing had gapped up with some nice volume, 1.5 million shares a couple trading sessions ago, but it still has this potential for an island out here, and that would not be a good scene. I believe that in Regeneron, that is at all-time highs out there. So it's one that you want to just kind of note on your pad out here, you know, like Stevie is doing, REGN, if I can actually grab hold of my pen. The problem is I have so many darn symbols on this pad, sometimes I forget what they're all about. In any event, we do want to keep an eye on Regeneron Pharmaceuticals. Still looks bullish out here, but it has that potential of a bearish reversal signal. In fact, let's take a look at GoPro. Let me see, GPRO. That had a potential for a island. Nope, okay, so no island reversal there. What we can see here, this morning it gapped down, but intra-session has gotten back up into the lows of yesterday, which was 54, 50, 55.43 out there. So no island inside of GoPro out there. Also to the downside, Emergency Energy, EMES. This thing has been a flyer to the upside, but had some volume as it took back some of its gains back on September the 2nd. So where is EMES likely headed to? Well, if we take a look at just simply retracement levels, that's the first thing I would use out here. You got a hammer candle right down here on July 31st. So July 31st, your swing point, that's where it should find some ultimate support if it pulls back into that area. Likely this will pull back to at least 118.15 out there. If volume continues to accelerate to the downside, then you're looking at the 110.66 to maybe even that hammer candle at the 101 level. That's ticker symbol EMES out there. If we take a look at Summit Midstream, SMLP is the ticker symbol. You got Summit Midstream. It is down about 5% out here. This is gap down this morning. Let's take a look at this. This is not a midsummer's night dream out here. Midstream, Summit Midstream. This thing gapping down with pretty big volume for it. 1.4 million shares. As an example, it only made the high yesterday with 82,000 shares. So I don't know what these guys do, but relatively illiquid. But let's go see what they do. Let's go see what Summit Partners does out here. They develop and operate midstream energy infrastructure assets, primarily shale formations out here. Interesting. We'll go take a look at that stock chart when we come back. But we want to go take a look at silver. We want to take a look at gold and anything else that you'd like. Just give me a call at 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 65, S&P's up 9, NASDAQ up 29 points out here. So gold is about flat. Silver is also up 4 pennies, so it's about flat as well. Let's go take a look at, I mentioned the silver chart earlier, so let's go take a look at it. Now, the chart I'm going to put up here has got the market profile, so there's a little bit of a delay, 10-minute delay, because of stitching together ticker symbols out here. What I wanted to show you here, if we take a look at what silver has done thus far, it's really done what it's supposed to do, in that it's tested the top of its descending price channel out here. Those are the yellow diagonal lines going across my screen. It's really done two things. Number one, you've got an intersection of that descending price channel line along with the market profile low out here, and that's at 1918. The actual that's at 1939. So it's at 1939. The actual high that we've seen here today is 1939. How does that work? Well, it works like this. It ran into resistance. So we know that's from a daily basis, we're on a daily chart, we know that this is a really strong area of resistance. So if silver is able to bust above that today, and I don't know that it will, it's something to keep our eye on out here. That would be pretty impressive. So this is a descending price channel that takes us back into the January or July 2014 time frame out here. I do believe on the daily chart out here. Do I have the daily chart out here for silver? Nah, I don't. But on the daily chart, I believe that is the seventh wave down in the Chapman wave. So that's a peak G. So that low out there from September 2nd is an important low. That is at the $19.11 out here. So that's what silver is doing as we take a look at it. If we go take a look at gold, let's go take a look at gold out here. Again, I like the way that the metals are behaving considering the U.S. dollar index is up so substantially. Now, we're at Thursday. What gold really needs to do out here, and it's doing it as we speak, what gold really needs to do is close back above its rising price channel. Now, the angle of this rising price channel is just so-so. What kind of degree angle is that out here? Not much. But nonetheless, it is a rising price channel where price has found support, and that's where gold is trading into right now. So a close around the 1275-ish level. What we will see for the week is that gold will have held that area. That's the weekly chart. On the daily chart out here for gold, what we've got is, come on, why is it doing this here? Give me a moment here I don't want to insert the study. Give me, what do I want to do? I know what I want to do. Give me a moment here. There we go. Okay, that ought to get my cursor back to normal out here. What we know about gold is that it has come back into its breakout area, because its real breakout area is June 17th, June 18th, and June 19th when we had the wide price spread candle out here. So it's coming back into this area. We don't have any kind of reversal signal inside of gold. Silver has been weaker than gold, so it has a larger descending price channel for us to take a look at. If we wanted to try to create that same channel line, let's do it here on a daily basis for gold. It would look something probably like, let's see, I gotta try to find a couple points of contact out here. That probably becomes the top part of the range, and the bottom, right around here. And let me go ahead and I'll just pull this back just a ways. So here's your descending price channel for gold. So gold has got its work cut out inside its version of its descending price channel in order to get back into bullish territory. Getting back above 1277 though, that would go a long way to being able to do that. So that's what's going on with that shiny metal. Let's take a look at the U.S. dollar index. We'll take a look at it real quickly, just to summarize what we took a look at during the first hour here. We'll go take a look at the currency pairs, most certainly. The U.S. dollar index is headed up to the 83.64 level. That's the first area where it may find some resistance. That happens to be an area where price had gapped down on the trading session of July 10th to July 11th out there. So it was a relatively good move. So 83.64, 84.25 is also another target area. That, if we take a look at the weekly chart here for the U.S. dollar index, we're going to see that that is a very strong level of resistance. And that level of resistance happens to be the reversal candle key reversal session on July 23rd. Had another key reversal bearish engulfing session on July 8th. Those highs, that area, 84.25 to 84.96, should be some pretty good resistance. At 84.04, you've got a 1 to 2, A to B equals CD to the upside. That is oftentimes where you see price begin to do something else, or any kind of chart once it forms that pattern out here. So maybe gold and silver don't really take off until this pattern here gets fulfilled, and then we see the U.S. dollar index start to back off out there. But anyways, trade each chart independently. When we get back, we're going to go look at the indexes. We'll go look at the S&P, the Dow, maybe the NDX 100. We should go check in on the NDX 100. And hey, I think we should check in on Apple as well. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show, folks. Dow's up 64, S&P is up 9, NASDAQ Composite up 29, Russell up about 7 points, New York Stock Exchange up 34 points out here. Quick check in on Apple. Let's go see what it's doing on its daily chart out here. There we go. Trading out right now at $99.92. A whopper of a day to the downside yesterday. Big volume to the downside. 125 million shares out there. So far today, we've been trading for an hour. It's got 37 million shares to the upside. So volume actually inside the equity from a daily standpoint is not too shabby out here. Now, with regard to its market profiles, it is back up above the market profile low at $99.52 out here. So closing back above that gets it back into neutral territory out here. But there was a lot of damage that was most certainly done yesterday out here. So it'll be interesting to see how the market responds to, responds to their new gadgets, which come out, next week on Tuesday, or where the announcement of that is. So anyways, as far as that's, let's go take a look at the, I don't have anything else really to say about Apple out here at the moment. Let's go take a look at the, I wanted to go over here. Earlier, I'd take a look, I think, was it this show? Might have been the last show. We were taking a look at the horizontal levels of support and resistance, a automated tool that I'm having created over on the eSignal platform. 2015 is the monthly primary trading range boundary line. So I believe that is the target where we begin to see significant resistance. Now, it's in that 2015 area. We've hit 2010 to 98. We're 2011. I still believe there is room for a little bit higher price out here. We'll see. The market most certainly inside the S&P 500 has gotten tired. If you take a look at these candles, ever since the trading session of August 26, you've got very small-bodied candles, 1, 2, 3, 4, 5, including yesterday's out here. So 5 out of the last 7, and today's candle is not done. Very small-bodied candles out here. Hey, let's go to our man David in Clearwater. Dave, thanks for calling. Thanks for holding. How are you doing this morning?
Outstanding, Steve. How about yourself?
Excellent. Thanks so much for asking. How was your holiday?
It was outstanding. It was outstanding. I had to go outside and play some ball with the young ones.
Oh, good.
Got one son who thinks he's the next coming of Dan Marino. And then I got another son who thinks he's the next Steve Rhodes. So we've got a rivalry going on in the house between what sport is better, baseball or football. So
that's great. That's great. Well, that's good. That they both like both sports.
Yeah, they both like both sports, but one is real passionate about baseball. He calls it the gentleman's game, and then I got my other young son who's all about football, who believes that football ought to be a controlled boxing match with a ball
instead
of gloves.
Well,
and,
maybe just introduce him to hockey.
Yeah. That's what I told him. I said, if you like that, then you would absolutely love hockey, because that's a boxing match with a puck on ice. So.
Yeah, when my son was younger, when he was growing up, ages 13 through like about 18 or so, he played hockey. And we got some pretty decent ice rinks in the Orlando area, but we used to drive to Tampa twice a week to play hockey.
Oh, no shit.
Yeah.
Where'd you go? Where'd you play at in Tampa?
He played. I'll have to ask him. I don't remember the name of the rinks over there. If you name some of the smaller cities, it wasn't right in Tampa.
Probably the Oldmore Skating Academy, because they've got a big rink they've got a big rink with a big hockey presence and ice skating. And
sometimes we used to have to drive down to the Fort Myers area. There was also a big rink down there. It was a lot of travel. During those days for ice hockey. But I know that the folks didn't want to hear us talk about sports. Although, did your son watch the Little League World Series?
Oh, of course.
Yeah, now that was great,
Absolutely.
Huh?
I know those kids. I'll tell you, man, those kids they've got some talent. You know what I'm saying? It's pretty surprising.
They do, and it's interesting when you take a look at some of the other countries. Was South Korea, I believe, that won the tournament, and what a group of kids that they had. But of course, I think that was coming from the country, right? We didn't have our country team out here. We had teams from different cities and in different states out there. So it's always a great time. I enjoy watching the Little League World Series games more than I do the professional games.
Sure, because it's all about putting your heart on the line and playing for the win versus maybe I don't extend my body the way I ought to because I might get injured and then I might not be able to play the following season. It's all about
Good point.
They're all about the win, man. They are all about the win. But
good point. So tell me what you wanted to take a look at, the S&P 500 or something.
Yeah, S&P 500. When you look at it on an intraday, on an hourly chart, it's not the most obvious. But we're coming in on a butterfly 1.27 expansion from the last move, down. That's coming in at it's 2015 and change, plus or minus 2014 approximately. And then when you put it on the hourly, see, it's not the most obvious, and so that's why I thought maybe it is, maybe it's not. I was curious for your opinion. I'm saying that I think it's forming a three drive to a top on an hourly basis, with the first drive coming in at 10 o'clock on August 26th.
Give me 1 second here. So you're looking at this on a 60-minute time frame?
Yes, sir. Yes, sir.
Okay. All right. Go right ahead.
On the cash, not on the futures.
Yep.
So on the cash one, 10 o'clock. We got a high of 2004. Looks like 28, and then we have the retracement back, so that would be our first retracement. So then the next drive would be at September 2nd, again at 10 o'clock for 2005.32, so just very slightly higher. And then it looks like we're in the process of forming the third drive, and it looks like we got an ABCD forming where the high is going to come in right at about 2014, with that A point being the low. These are approximate numbers here. The A point being the low of 1 o'clock at 1994.85. Your B point being the high of yesterday at 9. It's a 9 o'clock bar coming in at 2009.28. You know what I'm saying? They just pull your ABCD drawer on there, and it looks like we might have a 3 drive to a top with a butterfly expansion. Now we're going to need to see a reversal candle for sure, because short in this market, as I was telling Tom last time I spoke to him, has been nothing more than a pain amplifier, because this market doesn't seem to want to correct for more than a few days at a time. But looks like we may be forming a little bit of a top.
Well, no, you look at it's a great observation, and thanks for calling and sharing that with all of our listeners out here. And there's no question that you picked out the 3 drive to a top pattern. If it can get up to the 2000, now from a timing standpoint, it really needs to, it depends on how exact you want to be. So the intra-session high is basically 2011. And at 2012 would be your perfect 1.272 expansion. So I would say from a timing standpoint, the 3 drives that I'm using, the first drive that I'm using is at 10:30 on September 2nd, at 10:30 on September the 3rd, and then this one here at 10:30. So we know that from an hourly standpoint, we haven't forced the issue with regard to 3 drives. The problem with regard to this specific pattern out here right now is that 3rd drive was hit with a wide-ranging bar.
Exactly.
Our preference always is to see those patterns complete with much smaller bars out here. And so the reversal says, which is cool, because as you're pointing out. So when I took a look at primary trading range boundary lines with this new tool that is being developed, which I went back to in order to create those trading range boundary lines. I went back to 1997 in the S&P cash, or maybe it was even earlier than that. And it says that 2015 is the number where you're going to run into some resistance. So whether it's 2011, 2012, 2015, there's something out here. What we need to see is a reversal. It needs to be more than just Apple. One stock maybe can start the cascade, but it needs to be more than Apple. And the thing that concerned me the most as I was looking around at everything last night was this chart that I put up here, which is taking a look at the equal-weighted S&P 500. That's the ticker symbol I use for that is RSP. That's the Guggenheim S&P versus the actual SPY itself, the non-equal weighted. And typically if you're looking for major market corrections, which I know many are calling for out here, when you're looking for major market corrections, there's usually some type of divergence there. Usually under the covers, there's problems. And inside of this, we don't have that. And when I took a look at Apple yesterday, so just as an example out here, if we take a look at its version of this same chart, which is the QQEW ETF, that is the First Trust NASDAQ 100 equal weighted. And, when we saw the last large correction inside of the NASDAQ, we saw that divergent pattern that was occurring where the Qs were rushing to higher highs, but the equal weighting was saying, not so fast, Charlie. And even with yesterday's move lower inside Apple, we don't really have that pattern that's present. So it's got to make you just said, trying to take the short side of this trade, other than from an intraday standpoint, can be extremely painful.
Yes, pain amplifier is the 2 words I like to use to describe it. And for sure, the only divergence I'm seeing from on a longer chart standpoint is on the weekly. If you put the SPX cash, SPX on a weekly, you've got an RSI. Divergence from your advisory letter where you put us on to and educated us on the price RSI divergence. So if you look at the week of June 30th, 2014, from looking on my Thinkorswim platform, we got an RSI reading of 72.5.
Right.
And granted, we still got another day of trading plus the remainder of today, obviously, but it's looking like it's shaping up at that 67.8, maybe 69. So we'll see. We'll see. September historically tends to be a more bearish month than bullish, and but then again, we've had this move up in August, which is an outlier as well. So I don't know, Steve. It's this thing just may float higher, man. You know what I'm saying? Just there's no into it, man. It just floats higher.
You point out another good thing. So which is actually pretty nice. So when you put together, let's say, the 3 drive to a top pattern in the hourly chart, right? That should be a significant reversal area if that pattern is going to work. And then you take a look at the fact that we've moved higher on less relative strength inside the weekly chart. Right. When you take a look at last week's candle, it should be nothing to get a reversal signal then this week, because the body of that candle was so narrow. The open was 1991. The close was 2003. So any close this week below 1991.74, would give you at least that reversal candle signal out here. And if it can't do that, when it's so easy, it certainly has to make us say, okay, where are you headed from here? But as I say, inside of the indices themselves, inside the index out here, what I can say is that at that 2015 level, we should see some pretty significant resistance. That is a monthly primary trading range boundary line, and that should be pretty significant resistance.
Absolutely. And the last one you got is the butterfly pattern that I mentioned a minute ago, coming at the 1.27 to expansion of the move down. And, a nod to Tom, the volume's just dying. If you look at the SPI and you put it on a weekly, the volume, the candles are getting smaller, the volume's getting lighter. So I'm not saying we'll see a significant correction because there hasn't been one in 3 years now, but there may be a decent enough move down that can be tradable for more than a few hours. Hey, Steve, one last question, if I could. Would it be possible to give you a call when you get off the air? I got a question on your RSI
absolutely.
conversation I've been having, and I just want to say thank you so much for taking my call, man. I greatly appreciate it.
No problem. You have yourself a great day. That was Dave in Clearwater. And, David mentioned the light volume patterns out here. If we take a look at the Qs, and this is probably where we get another maybe signal with regard to the market out here. Now, the Qs have been making these, we've been into obviously, we're now the first week of real trading out here, right? Yesterday, supposedly, maybe the first real day of trading. And, of course, that first real day of trading was to take Apple to the mattresses out here. The Qs have been making these very narrow-body, doji-style candles out here. With light volume, which is really a signature. August 26, 20 million shares. August 27, 15 million shares out there. That's usually a signature of a top. Okay, so you've got that. Then you've got yesterday's candle formation. So here's the importance of really yesterday when we take a look at it. You had from the standpoint of relative strength, it's in the overbought zone. Okay, then that means you're extended. And when you take a look at yesterday's candle session, where the high of yesterday and the low of yesterday exceeded the prior day, and you had a lower close out here, one tick lower from its open, you had a key reversal, bearish engulfing. Folks, if the high of yesterday gets taken out in the Qs, 100.34, the market wants to continue moving higher. And that's really the message when we take a look at the equal-weighted ETF versus the Qs themselves. We're not seeing that divergence, which in the past has led us to lower prices out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 67. S&P is up 10. NASDAQ Composite up 28 points right now. We've got net advancing issues of 840. If the bears are going to take hold of the market today, what you need to see is net declining issues of 849. So you got the exact opposite. It needs to totally reverse course here. If we did see that 850 or more net declining issues out there, it would be telling us that inside the New York Stock Exchange that the summation index would go ahead and turn down. If we take a look at that here, the price oscillator would get down below the zero line And there still is a warning sign out here because we've got price moving higher, but with a descending price oscillator out here. And in the past, that has led to some type of market correction out here. The last time that we saw that occur out here was back when prices were moving from the in the middle of February up to a high that was put in on March the 7th. And we did see a price correction out there. So you've got that same kind of pattern that is in play here as we speak right now. And we'll just simply use as our cue inside the New York Stock Exchange, we'll use those net advancing or net declining issues. Now, the New York Stock Exchange, the high from July 3rd is now being tested, it looks like. That high is at 11,105.85. We are trading out, the actual high so far has been 11,108. So expect the 11,105. You're trading inside that swing point. I would expect that to be hit sooner than later out here. That's what's going on inside the New York Stock Exchange. So that's one element to look at. We want to take a look at the VIX index. Trade right now at 1193. Look, if the VIX index stages some kind of rally and gets and closes above 1273, that would be its 50-day exponential moving average. That would be a sign. We probably see net declining issues inside the New York Stock Exchange. We probably see, therefore, the summation index turn down. And if the VIX gets, so therefore, if you tie that into the 3 drive to a top pattern that we were looking at with Dave from Clearwater, then all that would be coming together. So there are signs of caution, like the yellow light is up, and so we've got to say, hey, look at our charts. What are those things that we can put together that would help us to understand whether some type of retracement or market reversal would be imminent? So these would be 2 that we would take a look at. If we take a look at the Dow, was talking about the primary trading range boundary lines, the horizontal levels of support and resistance. One of the reasons that the Dow has struggled at this level here is at the 17,101 area, right around here, is the monthly primary trading range boundary line out here. If we in fact see the Dow go ahead and take out its highs convincingly, this is a daily chart, some kind of wide-ranging bar, maybe some volume inside the diamonds out here, a close above 17,151 is what you would need out here. Then that says to us that price is likely going to head to 17,362 out here. And that's its next PTR level. So that's its next area of resistance. Daily, weekly, monthly, that becomes a midpoint. They're all resting right there at the 17,362. So if we don't see any kind of reversal, that's what you would be looking for as far as a breakout into that area. The Qs are what started the trouble yesterday. They were the troublemaker out here. If we take a look at the Qs, here's the 5-hour energy drink chart out here. They got to a fourth peak out here, peak D, gave us a bearish reversal signal yesterday, moved a little bit lower, but right now they are trading right back into the resistance area of its old market profile out here, which is in the 4,098 area. A close above 4,098, that probably sets up an additional move higher. So, folks, stay tuned. Our man Basil Chapman is up next. It is Terrific Thursday. That means we've got a full lineup for you. We've got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 3 to 5, and Andy Heck closing things down from 5 to 6. Have a great Thursday, folks. Look forward to seeing you tomorrow morning. Take care now.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
This is TFNN.